And without further ado, here's Ms. Campbell.
Thank you very much, Patricia.
You're welcome.
Greetings, everybody. Hope everyone's having a good afternoon. I've been with community college as an accounting and tax instructor since 1993. I also worked for the IRS for 32 years. And when I retired from there, I set up my own tax practice. So I pretty much live and breathe tax and accounting. So I'm going to start out by giving you some information about how to get ready to file your return. Then we'll go on to something more specific like filing status and your dependents. And we'll also talk about Social Security benefits. Then we'll talk about education credit, and then we'll finish up what you should be doing after you've got the return prepared. So let me just say, these are just things that I've noticed that happen during the tax season with my own clients and with people who call me and what my students ask me in the tax class. So one of the things you want to take with you when you get your return filed or have it available for yourself, if you're going to file on your own, is a copy of last year's return. You always want to keep copies of your return every year, even though you do it on TurboTax. And yes, they do keep them on there. Most people don't remember their passwords for the next year, so they can't get a copy of it, and you could need that copy at some point. You want to make sure your bank information is correct. And once you've filed an electronic return with bank information for your refund, or if you happen to owe money for them to take it, excuse me, don't change your bank account. Don't suddenly decide you need to change bank accounts, because that's going to postpone everything. And if you happen to have owed money, then the IRS is going to charge you 10% of what you owe for it being like a bounce check. Okay, so don't go around changing your bank accounts all the time. Pick a bank and keep the routing number and account number handy. So one of the most important things that you need for your return is to have all your W-2s collected, even if you only worked for somebody for a day or two. So you need to make sure when you're working for someone that your employer has your correct mailing address. If you happen to change that address, you're going to have to send a change of address to them, so that when it's time to send you a W-2, especially if you're no longer working for them, they have a way to get it to you, or you're going to have to track it down. Granted, the employers are supposed to have W-2s to you by January 31st. That doesn't always happen, but that doesn't mean you just ignore it. You have to have all of your income to file your tax return. And it's your responsibility to track it down. You also need your Social Security statement if you are drawing Social Security benefits. All right, you get that in January from the Social Security Administration. On the W-2s, you cannot use your last pay stub. The IRS doesn't like that, and it doesn't really give all the true figures. So it's best to get the W-2. If you're self-employed, you're going to need a record of all your income and expenses. Okay, now, this is one that comes up all the time. I have people telling me, I get paid in cash, so I don't have to worry about it. Not true. Cash payments for doing work, okay, other than a gift, are taxable income. It needs to go on the tax return. If you have rental property, same thing. You need to keep track of all your income and your expenses for the rental property. Now, a lot of times people rent to their family members, and that's fine, but that may not always qualify as rental property. So you would need to talk to the preparer about it. You'll need your brokerage accounts, your savings account to show if you've earned any interest. On the brokerage accounts, you'll show that you have dividends. You could also show that you sold some stock. One of the things IRS is watching closely now, even more than before, is Bitcoins or virtual currency. So if you're involved in that, depending on the brokerage house you're using, you need to keep track of what you put in and what you take out. All right. And then you want to take anything else to the preparer or have anything else available to you that you think you might need. If you're one of those people who does itemize their deductions, then you need things like your mortgage statement, your medical bills, you need contributions, okay, those kind of things. Let's see. Be careful who you go to get your return prepared. You're the responsible party. You're the one that's signing the return, saying that everything on there is true. So you want to be careful. Always review that return before it's submitted. And if there's something on there that you didn't tell somebody or that you didn't mean to put there, you need to figure out a way and get it off, okay? You want to always e-file. It's the safest way. It's the fastest way to get your refund, okay? And it's very secure. On occasion, sometimes you cannot file electronically, but they're very far and few between. So just in general about what I've talked about, does anybody have a particular question at this point that they would like to ask? Okay, so let's go on and start with filing status. This comes up all the time. People come to me and they say, well, we didn't get married until December the 1st, so we're going to file single this year. It's not going to happen. You got married before December 31st at 1 minute to midnight, you are married, and you're going to have to file married filing jointly. Now, if for some reason you don't want to file joint, then because we live in a community property state, Texas, you have to do a community property split, which means everything goes together like 100%, and then 50% goes on one return, husband, 50% on the wife. If there's 2 kids, there's 1 on each. So it's not just you file on your stuff and he files on his stuff. You have to do a split. Same thing for New Mexico. It's a community property state. There are only 7 of those states in the United States. So if you don't want to be bothered, you need to find a state that doesn't have it, like Illinois maybe. But they have terrible winters, so I don't know if you want to go there. So your marital status is dictated by December 31, okay? So if, and another thing that comes up, if you're single, you're single, okay? When you're single, there's always a possibility that you could file as head of household if you have a dependent that will qualify you for that. But let's talk about something that does happen here in El Paso a lot. There is more than one family living in the same house. So filing status sometimes comes around to who's filing what in that house. So if you have a married couple and then you happen to have an older child with their own child, the married couple is going to file, mom and dad are going to file married filing joint. And what does the daughter do? Well, she's going to have to file single. She's not going to qualify for head of household, even though she has a dependent child, because her parents are in the house and they're the one providing it. Okay, so if you have 2 families and they're both sharing expenses, the one with the higher income is the one that could qualify for head of household. So it's not just a simple matter of, well, I pay everything, so I'm going to file head of household. It doesn't always work that way. So you want to be careful about that. So is there any question about filing status at this point. Anybody has a scenario that they would like to discuss? Okay. So now we can talk about your dependents. A big one that we have is that when there are children in the house and they're under the age of 24 and they're a full-time student, their parents are the ones who claim them, period. Okay, that's what the law says. Now, when the kids get to be out of high school, it's not usually an issue prior to college, but once we get to college, a lot of parents and children think that once they get out of high school, that the parents can't claim them anymore once they start college, and that's not so. So these are the rules. If you are a full-time student and basically still living at home or in the dorm, temporarily away from home, and you're under the age of 24 and you're a full-time student, your parents are going to claim you. And if you worked part-time, you cannot claim yourself on the tax return. You've got to be careful, because if you claim yourself, then your parents have to wait to file until your return can be corrected, and then they can file. And sometimes that can take 6 months. So if you're under 24 and you're still basically a dependent of your parents, then they get to claim you. You cannot claim yourself. So you have to be careful when you're doing the return. There's always a box to check that says, can somebody else claim me? And you want to say yes. Now, here's some exceptions. There's always exceptions in tax law. If your parents live in Mexico, and they do not file a tax return in the United States because they're not required to, but you work part-time in, let's say, El Paso, then you can claim yourself. Or if your parents live in Mexico, but they have a U.S. filing requirement, then no, they're going to get to claim you. Back to the rule, under 24, full-time student, your parents claim you. If your family's in the U.S., in El Paso or living in Houston, or it really doesn't matter, you're still going to be claimed by your parents. Now, there are a few exceptions. If you were to get married before you turn 24, or if you have completely gone on your own, then of course it would be different. But all these questions need to be answered at the time you're doing the return. People who get Social Security benefits. Oh, I'm sorry. Let me stop. Does anybody have a question about your dependents?
Hello.
Yes, ma'am.
I have a question. If the children are under 24, but they work full-time, but they're still living at home, so they file their own? They're not claimed by the parents?
Okay, so what you're asking me is if they're still a student in college full-time?
No, but they're not students anymore. But
Okay.
they live in the house and working full-time.
Okay. If they're still living at home, but they're working full-time, and for 2022, if they make more than $4,600, you won't be able to claim them anymore, at least for that year.
Okay.
So they
so
have
if it's
to be
less than 46,000, I can claim
4,600.
4,600.
4,600. Yeah. Yes. If it's less and they're still living at home and you're still providing everything, groceries, food, laundry, everything, and they just use the money for themselves, and then probably you would be able to claim them still, because you're still supporting that person.
Okay, but I would just need to make sure that they don't put that nobody else is claiming them, correct?
Well, yeah, you can't, only one person can claim one person's social security number as a dependent,
Okay. Okay, thank
right?
you,
Does
ma'am.
that answer your question?
Yes, ma'am.
Okay. And the other thing is, and I've seen this happen all my years at IRS, plus as a preparer myself now, people claim other people's dependents because the other people don't need those dependents because they don't need to file. And that is just wrong. You can't do that. Don't let somebody claim your child just because you're not in a position where you need to file a return and claim the child yourself. So not claiming somebody else is not what, claiming someone else's dependents is not a good idea. Irma, do you still have a question?
No, ma'am. Oh, let me turn this off. I'm sorry.
Oh, okay.
Yes,
Okay.
thank you, ma'am.
Okay, sure. So the rule is pretty simple for the most part. If the child is under 24 and a full-time student, meaning at least 4 classes for UTEP and for community college, then they don't get to claim themselves. Their parents get to claim them. But like I said, there are a few exceptions. Okay. So let's go on. A lot of people are on Social Security benefits. Okay. Some of their Social Security can become taxable if they have other income on the return. So if somebody drawing Social Security benefits and that's the only income they have, nothing else, then they have no requirement to file a return and there's nothing taxable to them. But if they have other income like pensions or investment accounts, then they have to at least do a return to see where they fall. If we had a married couple, Social Security benefits and other income, if that adds up to more than $32,000, some of their Social Security is going to become taxable to them. So we have to be careful because a lot of people start drawing Social Security and then they're surprised at the end of the year when they have to pay tax on it. So there can be withholding on Social Security, but it's voluntary. And you have to take a form to the Social Security office and tell them to please start withholding. So I usually do that with all my clients when they start with Social Security benefits, because most of my clients, that's not all they have. They have other income. So you have to be careful about that. If you're a single person and you have Social Security benefits, and that plus the other income on your return is more than $25,000, some of your Social Security is going to become taxable. So it's not always tax-free to you, only when that's all you get. Okay. Does anybody have a particular question about Social Security benefits? Okay. Then the other thing that we see a lot of course, is credits. What are credits? They're dollar for dollar deductions if you're entitled to them. We have child tax credit. For the past couple of years, the IRS changed the rules and you were getting $2,000 for a child that was under the age of 17. Then it changed to $3,000. Then they changed it to under the age of 18. You know, they keep changing everything. So now we're back to the regular rules. And if you have a child still living at home in the US with you under the age of 17, has not become 17 yet, you could be entitled to the child tax credit. That is not the daycare credit. That's entirely different. Okay. So the child tax credit. Daycare credit is when you have a child under the age of 13 that you have to take to daycare. So you can have daycare in your home, and that has certain requirements, or you can have daycare outside of your home in somebody else's, or you can have daycare at a licensed facility. The easiest one, of course, is licensed facility. They'll give you a statement at the end of the year that shows what you paid, their identification number, their address, and that's what you use to claim the child care credit on your tax return. If you have someone watch the child in your home, then you're required to issue that person a W-2. So you would have to get someone to help you prepare a W-2. And then you would be able to take the child care credit for that amount of money. But let's assume for a second, because a lot of people do that, is that the grandparents are taking care of the child in the grandparents' home. So if you wanted to take the child care credit, you're going to have to issue your parents a 1099. If they happen to watch them in your home, you would have to issue a W-2. And most people aren't going to do that to their parents. So then you would have no child care credit. Okay. Another big credit is the education credit. Now, the education credit is the first one, and the best one is the American Opportunity Credit. This is the one that you're entitled to the first 4 years of college. Now, even if you don't have a degree at the end of 4 years, you can still claim the credit for each of the 4 years that you are going to school full time. The credit for education goes on the return where the child is. So it doesn't matter who pays the credit, that pays the education expenses, it matters who's claiming the child. So if the parents are claiming the child, then the parents get to claim the credit. And the problem with that can be that if the parents make too much money, they won't get the credit. But that doesn't mean that you can then turn around and let the child claim himself just to get the credit. It's not the way the law is written. Now, let's talk about the education expenses themselves. There's all kinds of tuition, books, there's fees charged. All of those are qualifying education expenses. What doesn't qualify as an education expense is dorm fees or parking fees. And even if you bought the child a new computer to start school, that doesn't count unless the instructor has requested everybody have a certain type of computer with certain software on it, blah, 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 and so on. Then it's an education expense. Now, so here we've summed up all the expenses you can have, and maybe they add up, let's say, to $5,000. I'm sure it's more than that in a lot of cases. And the child gets a scholarship for $6,000. Well, there's no education credit because the scholarship is not taxable to you except for the amount you receive over tuition and books. So if you had $5,000 in expenses and $6,000 scholarship, you would have to pay tax on the $1,000 excess scholarship. If you get VA benefits, and that's used to pay your tuition, VA is tax-free. So you have to look at how much VA you got, how much were the education expenses. If VA benefits is more, you don't get the education credit. If your education expenses are $5,000 and you only got $3,000 from VA or a scholarship, then you could claim the credit on the remaining $2,000. Pell Grants. A lot of students get Pell Grants. These are government grants. They are tax-free. So you can't claim a credit for payment of education expenses that was paid by tax-free money. I think that's just logical. You got income that was tax-free to you. You don't get to use it to claim a credit, whether it's education expenses or something else. Now, if you're on student loans, that is entirely different. Student loans have to be paid back. Therefore, what you pay with the student loan for tuition and books and so forth, you can claim a credit on. The credit is, the documents you need for that is a 1098-T, T for tuition. And you get those from the college. And they used to mail them out every January. And now I think students, for the most part, are required to go into their registration system or whatever it is for the UTEP, their financial account, and print the 1098-T off of it. But you will need that form. So you need to remember that. And this credit is only good for the first 4 years. After that, there's a credit called lifetime learning, which you can use indefinitely. There's no set time frame on that one. Does anybody have any questions about the credits? Okay, so let's talk about earned income credit. Earned income credit is money that the government allows for people who are in the lower income brackets. Sometimes when they are single, without children, depending on how much income they earn. And then the other is you can be single with a child or married with a child, and you're allowed those credits if your income is low enough. Now, that credit is the one that the IRS has the most abuse with. You have to be the one providing the household. So if you and your sister, let's say, are living in the same house, and one of you makes, let's say, $50,000 and the other one makes $30,000, and you each have a dependent, if you were in separate houses, you would probably both qualify for earned income credit. However, because there's 2 returns in that house, the one with the higher income, the $50,000, is the one that qualifies for earned income credit. But because of the amount of income, they may not get as much as, say, the other sibling would have gotten. But the higher income dictates a whole lot of things when there's more than one return in a household. And I'm not talking about a student who's under the age of 24 living at home with his parents. Not that. Okay. So you have to be very careful with earned income credit. And just because you were allowed it in 1 year doesn't mean you're allowed it in the next year. And once the IRS disallows it to you for whatever reason, you cannot claim that credit again for 2 years. They've gotten very strict about it, and refunds sometimes are delayed because there is a huge amount of earned income credit on the return. And the IRS may send you a letter saying, could you please provide more information, like where did the children go to school, and that kind of stuff. And so you have to provide it or they're not going to give you the credit. So be careful with that. And if you claim credit or your preparer unfortunately allows you to claim the credit that you shouldn't have, once the IRS catches it, you have to pay it back. And it's dollar for dollar. And it can cost you a lot, plus penalties and interest. So you want to be very careful. Okay, so any questions about that? Or has anybody ever had correspondence about anything from the IRS and they don't know what to do with it? Because putting it in the trash can doesn't work. It just makes it worse. Okay, let's talk about extensions. when it gets close to April, I get a lot of phone calls from people, mostly clients, that are kind of slow about getting me their paperwork, and they want to file an extension. Filing an extension is to file later. It's not to pay later. So if you're going to owe money, you have to pay that by April the 15th, or this year, I think it's April the 18th. So keep that in mind when you're filing an extension. It's not going to help you if you're going to owe money. You should file the extension with an amount that's close to what you think you're going to owe. At least that'll help a little bit. But remember, extensions are only to file later, not to pay later. Some people, we live so close to New Mexico, we have a lot of people in El Paso that work at White Sands, or they work in Las Cruces somewhere, and therefore they have a requirement to file a state return in New Mexico. So New Mexico doesn't care where you live, mostly. They care where you work. So let's say you live in New Mexico, but you work in Texas. You're going to have to file in New Mexico. Or you work in New Mexico and you live in El Paso, let's say. Then you're still going to have to file a tax return in New Mexico. All right, so most software can do that for you. You just have to put the information in there. You want to make sure that state returns get filed. Sometimes students go out of state, or they go to Illinois, Minnesota. They go to another state and they work part-time while they're in school. And so that student is going to have to file a state return. So you always want to pay attention to your W-2, especially for people that travel around and maybe work different places. And if you've got a state down there on the W-2 and it's got withholding for income tax or wages earned, you're going to have to file a state tax return. It's best to let the software handle it for you. Okay, so one of the things, once the return has been prepared and you've reviewed it, you want to, you're ready to file it, please make sure everything on there is what you believe to be true. If you pick up a return, tell them you'd like to look at it before you sign anything, and suddenly you have this huge business on there or rental property on there, and you're going, I don't have a business. I didn't tell you anything about a business. Don't let them file that return, because you're the one that's signing it saying you're responsible. So you're the one that IRS is going to come back to. So be very careful, okay? Make sure you get a copy of that return. Keep that copy, because in some instance, most of the time when you're filling out FAFSA forms, which are for the students that are going to college to find out if they qualify for financial aid, you need copies of yours, returns, the parents, and also the students, if there is one. So you have to have them, because if you have to write to IRS to get it, you might not get it for 6 weeks. So you want to make sure you keep copies. Also, if you happen to be here on a visa, going to school or living or working, and you someday want to apply to immigration to become a U.S. citizen or to get a green card, you're going to need your returns, okay? And you have to show it to the office, immigration office. If you don't have them, they're going to request that you get them. And if you didn't file for whatever reason, you're going to have to. So it's best to keep track of those papers for a minimum of, I usually tell my clients 5 years, but the statute of limitation does run after 3 years. But I just tell them it's better to keep track of it. And you need to have those in certain instances. Okay, well, I think I hit on most of the things that I come across every day in the filing season from my clients and from students who ask questions. So if anybody has any questions, please ask now. Or if there's something you'd like,
Can you hear me?
Gemma? Yes, Gemma.
I have a question. What happens if they steal my daughter? She's just turned 18 and they stole her social security number. They're using it.
Okay,
Um,
so if you already know that you have an identity problem, okay, it's called identity theft. Is your daughter required to file a tax return?
she's working, yes.
Okay, so when she files or when you file with her on there, assuming she's still a full-time student, and the return is rejected because somebody else has used that social security number, you're going to have to do a paper return and fill out some documents, and it goes to the IRS, and they will start issuing an identification number, an ID prevention number to your daughter every year. And you will have to put that on the tax return every year, and you'll get a new one every January. You can't use the same one. And that, once you get that number and you start using it, you can go back to filing electronically for her and yourself. Does that answer your question?
Yes, what is the name of the paper?
It's a paper return. So it's still the same, 1040, your tax return, but it has to be mailed in. And there's a form that you're going to attach to it. I'm sorry, I don't know the number of that form, but you can go to irs.gov and put in identity theft form and it'll pop up.
Okay.
And the preparer, when I do it for my clients, it's already built into my software and I just click on it and it fills itself out. It's just unfortunate that you have to do a paper return, at least for that one time.
Okay.
Okay. Okay.
Thank you.
You're welcome. Anybody else?
Hi, Miss Campbell. Can you hear me?
Yes, ma'am.
Yes, I have a question as well. Would there be any issue? So this is a situation. My sister and her son moved into our house just this last year because of, necessity. Would there be any issue when she's filing her, you know, doing everything for her taxes and everything, even though she doesn't live with us anymore? But I mean, she did for the majority of 2022. Would there be any issues with her and her filing?
Did she work in 22?
She did, yeah.
Okay. So how long did she live with you?
For about, I would say about seven months, I think.
Okay. Then I would probably say that there's not going to be any issues with it. She'll file a tax return based on her marital status now and if she's providing a home or not for a child. And you guys won't be able to claim her or the child.
Okay.
Because,
Yeah.
I mean, I realize you supported them for a certain period of time, but if it would have been different if she had not worked and lived with you all year,
Okay.
then, then maybe you could claim them, but not in this instance.
No, okay. All right. Yeah, I just wanted to see if there would be anything that she would come across once it was her turn to file.
Oh, no. And she on her own now in an apartment or?
Yeah, she moved out late December, so right before the year ended.
Okay, but she has her own place, right?
Yes.
Okay, well, I would venture a guess that where was she living before she moved in with you?
She had her own apartment as well, and then
Okay,
that ended, so she moved in with us.
Okay, so since she had her own apartment for more than 6 months, over 6 months,
Mhm.
she would probably, and she has a child, she would probably qualify for head of household.
Head of household. Okay.
Okay, but as long as she's got a dependent child.
Yeah, she does. Okay.
Yeah. Okay,
Okay. Thank you so much.
you're very welcome. Anybody else? Perla, what can I do for you? Perla, can you hear me? Perla, you had a question? Can't hear me? I guess not. Okay, does anybody else have a question? It can be about anything. Doesn't have to be about anything I talked about. Okay, for those of you that are, let's see, true. Okay. Um, if you are interested in learning more about taxes, there's a program on the irs.gov website that's called Lincoln Learn. And that's the program I use when I teach tax law in the fall semester here at community college. That's also the program that VITA uses for the volunteer program here in El Paso. There are several sites here in town that you can go to. They're sponsored by GECU, and they help people for free to do tax returns. Now, these are not complicated returns, okay? They are basically maybe a small business, maybe one or two rental properties, but not any corporations or partnerships or anything like that. And you can, as an individual, you can go in there and read through that information. You don't have to become a VITA volunteer unless you want to. But tax and accounting go together. So like my bachelor's degree was in accounting. And then I went on for my master's, and that is in accounting also with emphasis in taxation. It's called a Macy's. So if something like that interests you, you will be taking, obviously, accounting courses. And tax and accounting are, they're great. Try them out. If you like them, great. I've liked it since I was in high school, but it's not for everybody. I had a very interesting career with the IRS learning about taxes, and I really enjoyed it, and I had to use my accounting knowledge for that job. So there's lots of jobs out there for accounting majors if that's what interests you, and if you don't know for sure, try it out. See how you like it. Perla, do you still have a question? If your mic's not working, you can type it in the chat box.
I think it's working now. Could you hear me?
Just barely. Let me turn up my mic a little.
Thank you.
And we'll try again. Okay. Can you hear me?
Yes, perfect.
Okay, I can hear you now.
Okay. My son is less than 24 years, and he graduates for the master degree. And he also works as a part-time worker. Could I put him as a dependent?
For the year 22?
Yes.
Okay. So at December 31st, how old was he in 22?
22, exactly.
Oh, okay. So he was 22 and he's already finished his master's?
Yes, he graduates on December, in this December 22, and right now he has 23 years. So when he graduates, he has 23 years old.
Okay. And he was living at home with you?
Yes.
Well, the rule says if they're under 22 and a full-time student, but for the master's program, I mean, you can still claim him even though he worked, and the credit would be the lifetime learning credit.
Okay, perfect.
Okay, because the American Opportunity Credit is for the first 4 years for your bachelor's.
Okay.
Are you sure he's already getting his master's?
He graduates on this December, this December 2022 for the master's.
For the master's.
Yes.
Okay, so in 22, he was taking master's classes.
Yes.
Okay, so yeah, if he was under 24 and a full-time student, and even though he worked, you can claim him.
Okay.
And the credit, okay, the credit that you would be entitled to on your return would be the lifetime learning credit, not the American Opportunity Credit.
Perfect. Thank you very much.
Oh, you're very welcome. Anybody else? Okay, well, I hope it was helpful today. Let me give you my phone number. I'm just going to say it. Well, let me put it in the chat box. How about that? And you can always call me if you have any questions. Okay. I'm happy to help or talk to you on the phone, no problem. I hope y'all enjoy the rest of your afternoon. Thank you very much for your attention.
Thank you, Ms. Campbell, for the very informative presentation. We would like to thank everyone for being a wonderful audience and for coming in today. We shared the Tejano Passport link earlier so that you may receive your points for coming in today. I'll share it again just in case somebody missed the link. There we go. If anyone has any additional questions for Ms. Campbell, let us know. You can use your mic or the chat box. We'll be back next week with Lee Vasquez on diversity. Yes, there we go. We'll be back next week with a presentation on diversity by Lee Vasquez. We hope to see you all again next week, and thank you all again for coming in.